Okay, so let's see what we've got. Actually, just wait a minute. Okay, so the New York last day trading session. Let's see what we've got. Really, been in a trade for about the last 7 days now. Actually, I think, which is a long time to be stuck in a trade, but it's all good. I've kind of realised that we were at a point of topping out anyway. I think you can tell that. And so let's just have a little look at where we are. 4 hour. Let's off the 4 hour. Let's lower that down a little bit. It's a bit too loud, I think. Here we go. That's better. So let's look so we can see. You know, let's just have a little check. Where we are right now. I want to change that to retracement tool, so you can see even from the bottom right the way to the top to where we are, we haven't really retraced back down, and we are due a correction, probably more of a correction than what you'd normally anticipate. So, you know, I am expecting more downward pressure to start to come into the play. You can't normally, well, okay, we've consolidated for this amount of time, but still, you know, it feels it's been too impulsive. And one thing, whenever you consolidate over a longer period of time, where are we in terms of volume there? Let me just see if we can lock that, because it's a little bit frustrating. Here you go. Whenever we see, you know, this volume like this getting lower and lower and lower with the consolidation, it normally springs into some sort of an action, whether it's to the upside or whether it's to the downside. And now, you know, you've got to figure out, well, what's creating that? I mean, you know how I like to trade. I like to look at inducement, and so, you know, you could probably argue, in some sense anyway, that we've got a triangle pattern building up here. And so let's just see, somewhere around here, you know, we are seeming to come to a head. So got a bit more to go before this, you know, truly breaks, but we'll see. And now, you know, what I like to do, and one of my favorite ways of trading, is a liquidity trader. So let's take this off the channel right now. You know, if I was looking for like areas of trading, and this is where you get your confluence as well, I'm looking for where are the points of liquidity. And so magnet tool on, we know we've got liquidity here. We also know the next liquidity zone is all the way down here. We've got liquidity, let's say here. Okay. And then let's say we have liquidity here. So these are these areas here that you're going to have a lot of reaction, whether it's to the upside or the downside. You know, if we break through here, we should see some sort of a reaction from the bulls. And I think if we come break up here, we should see, you know, some sort of decent reaction from the bears. But the economic news hasn't been too favourable lately neither. So, you know, you take that with a pinch of salt. But, you know, Bitcoin just seems to be outwitting the markets. Doesn't matter whether you think it's due a correction or not. It just continues to go up. I mean, I've been seeing a decorrelation with the DXY lately, and that's historically always been inadvertent. So you always normally see whenever the DXY goes down, which is the basket of goods for currency, you know, Bitcoin goes up and vice versa. And so, you know, we have to see what's going on. Let's take a look at trading light, see if we can see any divergence. So price has been going down, but so has the CVD, whilst interest has been coming in. So what that tells us is money's been coming up. So there's been more money's been coming into the actual exchange, at least since, what's the date today, 5th of April, is that right? 6th. So at least since the 5th, we've seen a nice uptick in new money coming into the exchange. I think this one's on ByBit. So new money coming into the exchange, downward pressure coming in from the bears resonated with actually downward pressure from price action. So there's a sentiment that it's bearish at this moment in time. Not really seeing too much by way of big liquidation events on the long side. So, you know, we may not be done yet with the downward pressure, which is why I still think we can, you know, still head further down. So that's okay. That seems to be making sense. Let's have a little quick check at XO charts. Let's see what XO charts is saying. What are we on here? We are on the 15-minute. Nice move to the upside coming in. You can see a lot of imbalances on this right hand side here. What's the volume on there? Not much. Delta is moving up and down. Just expand that a little bit. You can see the majority of the volume was down here. And normally, whenever there's a bearish candle, you really want to see that starting at the top side of the candle, because that normally insinuates that it's actually more of a sustained move to the downside. But when the pressure starts to come in at the bottom of a bearish candle, well, it normally signifies that a reversal is due, and obviously we've seen that here. Okay, and then we're seeing it here, but incidentally now we're starting to see that the volume is actually at the top of the candle, which signifies that the bears are stepping back in. It's a fantastic tool. I don't know if anyone ever uses this, but for me it's a really good tool. Really good tool to watch. But I think today in general we are on a red day. Let's see what our good old favourite, and let's just get rid of them for a minute. Actually, let's leave them on. What I want to see is how that aligns to any pivot points. Let's just bring this down a little bit. See, we've got the monthly pivot point here down at 25,717. We have R1 up here at 32. I mean, that would be a big move for it to come up to R2. R1, and then down here 22. So that's a you know, this is a month phase, yeah, so the whole entire month we're on the 4-hour candle, so you've got up until obviously the end of this month. So we haven't quite touched the pivot point yet, which for me seems like the obvious move. I mean, if we take our move here, your pivot point is pretty much at your 382, thereabouts. So there's a little bit of confluence there. What about our volume zones? Let's have a quick check at those. I've not looked at my volume zones. Where are we at right now? So you can see, you know, on this volume zone here, how well it's been respected. Each time it's came down here, it's reversed back in, come down, reverse back in. And so oftentimes what you normally want to see is the more times it hits a zone, a volume zone, the more chance it's got of breaking through that zone. So that would make sense. And then let's have a look at, you can see on the major support and resistance line, which we've been tracking, that's the top of this, which we've hammered a number of times but just cannot break through. And so, you know, a lot of the reasons why I think we're heading down is because it just hasn't had a chance to kind of come through. You know, and each time it has tried to come through, it's been met with stiff resistance. And so, you know, we can almost, I guess, indulge me in agreement that this level here, this 28,774, is a really strong level. Right, so that's good. Okay, let's get rid of them. Where are we now? So next thing I want to check is, let me just see what we've got. Tell you what, let's take these, let's take these off and let me look at 15 minutes. You can see we've been on a pretty downward move at the moment. Let's see. been rejected, hasn't it? Let's close that fair value gap. This is the previous day low here, and you can see it's acting as a bit of a support region at the moment. But I firmly believe we are on a bit of a red day today. You know, I've been in a pretty much in a trade, locked in a trade for about 6 days, 7 days, maybe even, you know, a bit longer actually. And I've had opportunities as well to take profit, but never. And as a consequence, it comes back into the red, and then you're like, okay, well, it is what it is. You've got to kind of manage that. Of course, my stop loss is 29,250. We came very, very close to that, actually. Up here somewhere. Well, actually, 29,197. And so, we are certainly heading in the right direction, that's for sure. So, continue down. Let me just fix this, it's a bit messy. I don't like to see all this crap. Color candles, not interested in that, not interested in all that. Buy and sell, trend lines, liquidity grabs, don't need any of that. Don't really need fair value gaps. Don't need any of that. Don't need them. I do like them, they're my favourites. Let's see. Don't need any of that equal highs or structure, they're all just nonsense. Internal. None. The thing I'm keen to see is the order blocks. I like the order blocks, and I like, you know, the previous day low, previous day high. They're just key things for me. I mean, look, if you can't come into a chart, I genuinely mean this, if you can't come into a chart without indicators, you know, you don't really need indicators a lot of the time. They should just be there to kind of guide and assist and just draw your eye to things without you having to put too much effort and attention. But ultimately, you know, if you can't come into a chart and just go, well, actually, where are the key points? You know, where are the areas of value? I mean, I'll just as an example, you know, I'll take this off. You know, let's just have a naked chart session, right? And so, you know, as you're looking at this now, you're thinking to yourself, okay, well, what is important right now? Well, it always starts with liquidity, right? So it's important to understand where your liquidity zones lie. And so, you know, what is liquidity? Well, at its heart, liquidity is what makes the markets move, right? But you can't just have liquidity. Like, there's different types of liquidity, actually. There's resting liquidity, right? So they're just on the order book, and they're just sitting in, you know, unfulfilled orders, waiting for someone to come in and buy at a specific price or sell at a specific price. But ultimately, if there was no aggression which comes from market orders, which are the guys who are just willing to pay the spread, come in and spend, you know, buy at one value or sell at one value without worrying, and the markets wouldn't move. So you need to have aggression, and that's where liquidity providers, market makers, all of these guys come into play to keep that market constantly moving and buying and selling. So that's what you're ultimately looking for. And so the key thing that you've got to understand of why it's important is, well, why is it important? Why is liquidity important? Not just for the sake of filling small orders and stuff like that, but moreover, why is it important to bigger players, whales, institutions, you know, the players who like to move large quantities of Bitcoin? And so the reason that becomes important more than anything is simply because you want to be able to trade without worrying about slippage, worrying about price impact. And so think about it logically. If I'm trading in a low zone of liquidity, which is to say in the order book, if it's quite thin and there's not enough liquidity, if I do a large market order of, say, you know, 1,000 Bitcoin, and there's only, let's say it's at, I don't know, 28k, and at that 28k, if I try to place that order at 28k with 1,000 Bitcoin, my actual order might not be nowhere close to 28k. It might be, you know, 28,200. So that's an additional 200 basis points on top of what I originally thought I was getting, because I tried to buy, you know, where liquidity is low. And so what oftentimes happens is you get traders or larger players who try to manipulate kind of less suspicious traders, let's just say, with patterns and flags and triangles and circles and squares. Sure. But you know what I mean, these kind of ideas and patterns that your eyes naturally draw to. And so all the time that these patterns are being created, it's like, you know, I can see here simple, you know, channel maybe somewhere down here, and then, you know, you could say maybe this is like something here as an example. And so it's okay, we've been, you know, up and down this channel. So I always mark some sort of a pattern by at least two data points, right? And so you can say, let's take my magnet tool off. You can say, well, actually, you know, we've got a touch point there, a touch point there, and a touch point there. So there's 3 touch points, right, which we've had on this move. And that's like, okay, well, then we're now in some sort of a trade. And so it can't just be random, you know, people at an auction buying and selling, yet these patterns just happen to always play out perfectly. And so when you get a lot of commitment along this line here, you know, building up from traders, but what it ultimately means is at some point you're going to have everybody's stop losses all up here, you know, just above, because that's an obvious place to put a stop loss, right above where your entry would be as a short. And then you're also going to have your higher leverage traders who are 100xing, maybe even 200xing on certain platforms, depending on what platform you're on. And then you're going to have your aggressive breakout traders who are all going to commit at this level. And so this level becomes a really, really key level for liquidity. And so now we know, okay, well, we know there's going to be liquidity at this area. How does that help the bigger players? Well, number one, it means when there's a lot of liquidity being committed at this level, then at least we know that, you know, price impact might not be as bad. We might not get too much in terms of slippage, and therefore whatever we're trading at, even if it's in multiple buys, there's less likelihood chance that we're going to get stopped out on, you know, or not stopped out rather, but we're going to get hit with a, you know, a kind of price impact. So your average entry, let's just say, is a lot better. And so that's why you see these spikes that happen a lot, because what these do is commit the order book, you know, absolutely rocket through that order book. The order book then goes really, really thin because everyone's orders are just being soaked up, and then the price absolutely reverses back down, and there's absolutely no resistance back down then, simply because the order book's just been thin. Everyone's just gone long, got trapped, got crazy, then get washed out, price comes back down. And so the way I like to trade, my idea on trading is to spot these fake outs, false breakouts, swing failure patterns, call them whatever you want. Ultimately, what I know of the market and how the market works is the longer and longer and longer we see a trap, then the more likelihood that we're going to see some sort of a fake out. And now the other thing you've got to think about as well with this, which is why it's important to understand, is that with I've lost my train of thought. It was a good point. It really was a good point, and I forgot what I was going to say. Anyway, doesn't matter. So yeah, I'm always looking for that reversal trade. And so, you know, based on the fact that I'm thinking logically around where stop losses are always going to be, you know, anywhere in these areas are going to be key, because liquidity is going to be at each one of these areas here, just above, you know, where people's stops are going to be. And there you go, you know, and then to the downside, you know, well, this one here, and then you've got one here. Okay, so if you longed at this point here, you know you're going to have a good opportunity. So you can see a lot of the commitment is being built up at the top, which is why I think any move to the upside is probably going to be a fool's errand. I think if anything, it's probably going to break to the downside. That's what I would suggest will happen. So we'll see. And then if we want to overlay, actually not there. Let me just see. Where are we? Here we are. You know, on the 15 minute, you can see, you know, we have an order block up here now. rightly so, you know, to take out some of the liquidity here, you could make a case and price could come up here. And this is a classic play that I see all the time, which would be a nice move to make. You come up here, so you wash out this one, you wash out this one, come and hit the order block, and then come back down to the downside. Get back into your range, and then, you know, maybe even continue down. So understanding liquidity, understanding why it's important is much more important than just trading blindly and not really understanding it. I've been sick over the past, I don't know, feels like it was at least 2 weeks or something. I had COVID and tonsillitis at the same time. It was fucking horrible. I'm not gonna lie, and I wouldn't wish it on my worst enemy, I tell you. It was pretty bad. Wasn't really interested in any analysis, any trading, anything really. I just just didn't like it. But anyway, we live to fight another day, and guess what? The markets are still here. That's another thing. Always still here the next day. Be nice if someone just joined me on this. Oh, where's my children coming in now? I can hear them. So I think price continues to move to the downside. You know, we've hit the top here again. No liquidity grab this time, not at least at this point. What are we on? Just after, well, silly hour. We've got another 10 minutes yet before silly hour's over. I always think the real players start to come in about 4 o'clock my time, UK time that is. So that's about a couple of hours after the market opens. But we'll see. Open interest continuing, so we can still see more money still coming into the market. See the imbalances here at the bottom. Got this naked point of control right here, all the way back from here. What are you guys currently trading at the moment? What have you found most success with? I know a lot of the guys in the Discord server have been looking at Arbitrum. Been smashing it with that lately. Matic as well. I've seen some good analysis on an Ada. Cardano. What's been popping for you guys? There's nice volume in that last candle, and the one prior to. Look, I mean, you can see this tells you a lot. I mean, we got 2.7K's worth of Bitcoin. You know, and the delta was 66, so a very small amount of that. was to the positive, but the CVD was down, so it was negative. So you can see when the CVD is down, that's negative pressure. So aggressive orders, market orders coming in, but still can't push the price down. So what this doesn't show you is the limit orders or the passive orders. So they've been just effectively being absorbing the sellers. So the sellers have been coming in. You can see it here, by the way. Sellers have been coming in, really trying to aggressively push the price down, but the prices just came pushing back up again. So that when you're looking at a negative delta with a positive delta with a negative CVD being negative pressure, but the delta is more buys than sells, then effectively you're going to expect to see a push to the upside. And it's like now what we're seeing is we've got negative CVD, which means bearish, so there's aggressive market orders in terms of your CVD, but you're also seeing that the delta there's much more sells than buys on this current candle. We've seen a lot of commitment coming in as well, and the CVD is staying negative, so there's a good opportunity that this will continue to move down because the price is being respected. So the price is moving down in line with the delta, i.e. there's more sellers than buyers on this current candle. It's obvious, but it's not always obvious that you've got more sellers than buyers, that the price doesn't go down, because what you don't see is the limit orders that are soaking them up. So the way you can tell that is if you have both delta that's negative and the CVD is negative, then it's usually a good sign that there's not too many buyers trying to oppose this specific 15-minute candle. How many of you guys trade with ICT? I mean, I can take it or leave it. I mean, I don't get locked into all the buzzwords and stuff like that. Really, I have a good handle on liquidity. I understand liquidity, and I understand the meaning and reasons why liquidity is important and why traders like to trade where liquidity is high. I mean, just look at this. If I take that off the screen and I go into the let's go into the 4 hour, right? This will be a fairly good chart to look at on the 4 hour. Let's take them off. If you look at the volume zone, is there anything you can see, anything your eyes are drawn to specifically about volume zones, and any absence of volume zones? What should become clear to you actually is that when you see this consolidation, it tends to consolidate around volume zones. And then when price really slams through and breaks through, why don't we see any consolidation between the zones? You just see big moves, and then we kind of come and consolidate around the point of control here, which is the red one, the red line. We consolidate here. When we stop consolidating, we break through up here, and so volume is hugely important. Volume zones, it's where most volume is traded. It's where entrapment generally occurs, and so you have to be mindful of your volume zones. They're very, very powerful, used in conjunction with things like liquidity, understanding that where liquidity will lie. It just kind of makes things a lot simpler to trade. And order blocks, great, ultimately what it is, it's a point at which buyers or sellers have stepped in aggressively. And so, okay, well, that's an important point to note on the chart. Do you need fancy tools for that? Definitely not. You should be able to come to a chart and spot where an order block is, really without thinking about it. I mean, right now you can see, that's an order block. And I know it's an order block because we've got a big engulfing candle. Price tries to push down here. But the engulfing candle comes in and takes us to the upside. Let me just move that across a second. So that this area here is an order block. This is an order block here. Okay, because again, price tries to come down, huge big engulfing candle, and we get knocked off. Another order block here. Yeah, this whole area here, big order block zone. Then you would say this would be an order block. this zone, because again, came back, smashed it down. This would be an order block here. You know, if I take that zone there, is effectively an order block. And you can see, because you come and tap it, come back and tap it again, and now we're kind of, you know, heading down. It's just, you don't want to have to think to yourself. A lot of people, I think, in my opinion anyway, when they trade, that they need the next greatest and, you know, best indicator out there that's going to say, hey, this is when you buy, this is when you sell. They just don't exist. Markets are too smart and sharp for that. What you do need is a good nous and a good understanding on liquidity. Understand where liquidity would lie, why it'd be beneficial for price to move to a specific area, thinking about whales, thinking about institutions, thinking about how they trade, and then follow along with that narrative. Don't you know, don't waver from it, because I think one of the things that gets most newer traders is they flip-flop between different ideas, and it's just, yeah, it's not conducive to a systematic approach, let's just say. And so, you know, it's important that you have something that you're confident and comfortable with, and, you know, eventually you'll become a better trader. I mean, we're all learning, by the way. I'm not the best trader in the world, but I do okay. You know, I understand when to get in and when to get out, and that's really all you can want to do. Don't overcommit, don't over leverage, don't be stupid. Identify your zones and trade them. If you by the way, if you're not in my Discord server, what the fuck's going on? Get yourself in the server. It's cool. So many good people in there. All friends, family, all that kind of stuff. All with the same kind of ideas. If you're not yet on a central exchange, again, I would absolutely, personally, and highly recommend ByBit. I'm a ByBit partner, by the way, for transparency. You know, you don't have to use ByBit. Don't care. If you do use ByBit, however, or you want to get in an exchange, then use the link in the description. I'm a top tier partner, which is great because it means I can offer the highest of rewards in terms of bonuses. They also have the unified account, which is amazing, which allows you, and this is such a good idea, I didn't realize until I changed my account to unified, but basically it allows you to open up multiple trades. So you could have a trade on ETH, trade on ADA, trade on Matic, you know, AVAX, Bitcoin, any kind of trading instrument you want. And you know, you might find that 4 or 5 year trades are going really well in the right direction, but one of them's going in the wrong direction. And so depending on how you trade, you know, you don't want to be liquidated on something if your idea is still right, you know. So you may have missed a point that you think it's going to reverse from, but you still think it will eventually do that. And so rather than having to add more, commit more capital, yeah, then what it will do is take your unrealized gains from another coin or another one of your more, yeah, you trades that are in. So it's a fantastic way of just keeping in the trade, but not, you know, squashing your account or liquidating that position. So I again, it's not for everyone, but it's a nice feature, one I like. As I say, the link is in the description. ByBit. I've also done, I feel like this is a salesman's pitch here, but I've also done the Apex Trades blueprint. It's exactly how I trade, you know, what I look, how I set things out, how I look at my volume zones, how I approach liquidity zones, what I determine as a liquidity zone versus what I don't. All that kind of good stuff is available for £15 or $14.99. Again, that's the Penn site link in the description. And by the way, if you do sign up with my ByBit referral, I'll give you it for free. I'll give you it for free, baby. I wish there was someone on here to talk and have a bit of interaction with, you know. I haven't done a live in a while though, so it is what it is. I put a nice little call out earlier on in my server. It was on the 15-minute. What I'd spotted was there was some nice commitment on the from an order block. Tell you what, I'll do it from here. It's been mitigated now. But basically, this was an order block around this zone here, and I said that I think it was 19. What was it now? I can't remember. No, it was 27.9 something. That was a good short opportunity, and it played out quite well. It was like 9.5 thousand Bitcoin that was committed at that zone, so I knew it was a good strong area. I came up, tagged the zone, and then reversed back down. I had a stop loss at 28,100, which it got to about 28.80, something like that. So it was just within its stop zone. Turned out to be a nice trade. It's just what we're about. Do you know what I mean? So my friends, let's call this one a day. I think still in the short. My TP is going to be down here around this 26,800, 26,600, somewhere around there. But I don't tend to put a fixed value on it. I just kind of wait until it's in the zone that I'm happy with, and then I'll let it take profit, because yeah, it does feel like we're starting to move down a bit now. Right, okay, well that's enough. I shall call this one a day, and yeah, I'll speak to you guys in the next one. Peace.